Hey everybody, welcome to Technical Tuesdays. This month I sat down with my friend Brian Shannon. Quick background on Brian. He's a full-time trader who specializes in swing trading of U.S. equities. He's the author of the highly regarded book, Technical Analysis Using Multiple Time Frames. In this post, Brian tells us why his favorite indicator is the VWAP, the Volume Weighted Average Price. He explains how he gains an edge using it, shares with us his entry and exit techniques, favorite trade setup, and favorite indicators for confirmation. Before you listen to the interview with Brian, I want to mention the technical analysis guide done by RJO Futures. I have it downloaded on my desktop, and it's a great resource for the basics of technical analysis. So if you're interested in learning about the basics of technical analysis, or if you're like me and you like having a solid resource on the basics, I highly recommend you download this free PDF. So without further ado, let me take you right to the interview with Brian. Brian, what's your favorite technical analysis tool?
Eddie, my tool, anyone who knows me would know that I will answer that with the volume weighted average price, also known as VWAP, or some people mispronounce it, in my opinion, as VWAP.
The VWAP. So, Brian, what was the process you went through in choosing the VWAP, volume weighted average price, as your favorite tool?
It's interesting. I kind of stumbled into it in about 2006 with the trading platform I was using called Realtic. They had something on there called VWAP as a trend line where you could draw it and it would draw a horizontal line. And I could see that as I dragged it across throughout a session, it would often act as support or resistance. So that's when I first kind of got into it. And then I wrote an article about it, I think in 2012 for tradingmarkets.com. But about 2.5 years ago, I spoke to the people at TC2000, and they created for me the anchored volume weighted average price. And what that simply is, you can take a volume weighted average price from any point in time to determine who's in control, the buyers or sellers. It's, supply and demand, and really, in my opinion, the perfect indicator as far as what sentiment actually is versus being open, something more subjective like, people's opinions, basically.
So I think that anyone can look up how to use a VWAP, or any indicator for that matter, right? You can go Google it, get a technical analysis book, and there's a basic way to use an indicator. But in my opinion, I think it's very important for each trader to personalize how they use an indicator and to develop how they are going to get an edge using that indicator. So Brian, what is your edge using the VWAP?
I think the real edge comes from the fact that you can measure from a specific point. So a VWAP is an average price, a dollar cost average, basically, from any point in time. It tells us who's in control from January 1st, the buyers or the sellers. How is that changing? Are they defending that level, or are they, letting the market run right through it? So to determine from a specific point, and you can do it from earnings report, from the Federal Reserve, from the beginning of the year, from whatever period you want that might have created a shift in market psychology, basically, rather than, let's say, a standard moving average. What's the significance really of a 10-day moving average? Why 10 days? Why 50 days? Why 200 days? It doesn't, those are things that are just kind of made up and accepted versus something that says, here's the supply and demand dynamics from a specific point in time. So to be able to use that in terms of saying, here's who's in control, where are the consolidations where I might be able to find a reversal, and then use a very tight stop to get that edge in the trade, especially, now with a volatile market, more for really short-term trades.
So you feel your edge is by looking at what's happening in the market that you're trading, seeing when a critical moment has happened, and then you anchor the VWAP from that moment because to you, that moment is very important and it's, let's call it, setting the tone for the next move.
Absolutely. Apple just reported, horrible news. The stock was down and is still down from there. But if you actually look at the volume weighted average price, and I'll send you a chart for this of Apple since that event, the buyers are in control. It might be down, but from that event, it's been accumulated. People are buying that stock. So it says, maybe, compared to where it was 3 days ago, it's down. But since that event, on average, it's being bought.
Do you do any stats on how you use the VWAP that tell you a winning percentage or anything to give you an idea of what you're looking at actually works statistically?
That's a great question. I'm not very good at doing back testing and that sort of thing, but I think that just the general, subjective nature of where you anchor from makes it very difficult to back test. I mean, you could do, and I know a gentleman, Louis Yanis, who's trying to do some of this back testing, but especially for shorter term trading, I mean, you can use the high of the day and anchor a VWAP from that and stay short against it, for a period of hours sometimes. So it's too subjective to really back test from a shorter term time frame. I'd actually be interested in hearing other people if they've done any type of back testing, but I'm a little bit skeptical because there's more of the art and the feel of knowing where to anchor that VWAP from.
Yeah, so also I think what you're saying, a lot of it comes with the execution of the idea that you have.
Yeah, so I mean, people talk about support and resistance, and they say that markets, here, don't buy because the market's at resistance. Well, you don't know resistance until after the fact. If the market blows right through it, well, the people who called it resistance are obviously wrong. It's an area, it's a level of interest. To me, it's not here's where to take action exactly, but here's where to look on a shorter term time frame for evidence that yes, that is becoming resistance. Sellers are, overwhelming the demand in here. So I think people tend to look too, and this is where I think technical analysis gets a little bit of a bad rap because people are looking for it to be too literal, and you want to realize that there's an art of trading as well as the science of technology. I mean, technical analysis rather.
Yeah, I completely agree with that. We could do a whole nother discussion on trading not being black and white and how there's an art form to it, but that's for a different day. I want to stay on execution with you right now. Talk us through a recent entry that you took from using the VWAP. Talk to us about how you determined your risk, your stop price, and potential targets.
Okay, great. I sent you that chart of the SPY, and what we're looking at there is 3 minute data, and 3 minutes just because I could fit in all the data there. There's nothing magical about that. But I anchored a volume weighted average price. That's the blue line that you'll see from January 2nd, the first day of trading this year. The market gapped down, rallied up, throughout that day, and then closed on a spike higher. The next day, it gapped down on Wednesday and stayed below its purple volume weighted average price for the day. I then anchored a VWAP off of the low down near that 244-ish level. And then the market rocketed higher right up to the year-to-date VWAP. Now that's kind of sounds a little bit silly, but it's, at that point it was about 1.5 days into the market. So people will call that the 2-day VWAP. But, when you look at it at noon Eastern, it's not really 2 full days yet. It's just we're using yesterday and today, whatever is eclipse. It's only a 2-day VWAP at the end of the day. But the point was it rocketed higher from 244 and a quarter up to 248 and 248.36, I think was the exact level. And I put it out on Twitter saying, be aware of this level. And then I started selling a little bit in that area. I was then looking at a 1 minute chart and watching the tape, and it was starting to slow down. So I shorted a little bit. And then as it dropped away from there, I simply set my stop above that peak, and then I added to it on the bigger break. And I was, so I was short a pretty decent amount as it dropped down, and I was looking at it saying, well, where does this have the potential to retrace retrace to. And I looked at the volume weighted average price. That's that purple one for the day, for Thursday rather, and from the low, and they kind of came together in that 246 and a half-ish level. So that became my target in there. And it was, I mean, it was probably a 25-minute, 30-minute trade, and I took, about $1.50 out of it. So that wasn't the low of the day. I wasn't trying to, buy the low, but I was looking for a nice trade on a retracement of that emotional move up to that 2-day VWAP.
So when you're using the VWAP, is there a way you consistently determine your stop, or does it vary based upon the look of the setup?
Well, the way I look at it is that I don't base my stop on the VWAP itself, but instead based on the price action. So if I'm short, I'll look at it and I'll say, I have a price objective. I want to cover some there, absolutely. And my stop will be based on the definition of trend. So if I'm looking at this now on a 1-minute chart and I start to see it makes these lower highs and lower lows for the next 30 minutes, then then it breaks that pattern of lower highs and lower lows, and I know this is a day trade, then I'll get out of it there because the definition of trend is broken. It's hit my objective and it breaks the trend, the definition of trend. So if I was there for a trend and the definition of trend breaks, I've got no business, sticking around for it, basically.
Is there a specific look using the VWAP that is your favorite?
Yeah, I look at the slope of the volume weighted average price. So looking at that chart again, the purple volume weighted average price, you see where I was covering, it was starting to flatten out. And the volume weighted average price from the low, that green one there, was still rising. So I was thinking that maybe it would even get a bounce from there. I didn't get long in that level, but what I like to see is a flat to advancing volume weighted average price, hold as support on a pullback, and then to buy a break higher from that level. That way I can put a stop just below, or I look for a flat to declining volume weighted average price for the time frame I'm looking at, and then short it with a stop above that most recent relevant lower high for the time frame I'm involved in.
Now, I want to talk about how you may use the VWAP as a tool for helping you with exits. Let's just say, hypothetically, you didn't get in using the VWAP. You used one of your other indicators or strategies to help you get into a trade. How would you use the VWAP to help you exit a trade?
Okay, so if the market, if I'm long and the market is trending higher, and what often happens is that the volume weighted average price will act as support intraday. So you'll see that buyers are congregated near that volume weighted average price. You can actually think of it very similar to the psychology of a 50-day moving average. So on a shorter term time frame, and I'm talking about day trading now because this is the environment we're involved in. To me, holding overnight in these ranges is just insane. But I'll use it to say, what's the slope? Is it holding as support? Is the volume weighted average price holding as support and still advancing? And then if it breaks, the VWAP and it makes a lower low for that time frame, then I'll just move to the sidelines and say, looks like the sellers are becoming more aggressive. The sellers are in control, and that's what the VWAP tells us. It's the combination of price, volume, and time all blended together to say here's who actually has control, the buyers or the sellers.
Do you have a favorite time frame that you use the VWAP on?
Well, if I'm gonna day trade again in this market, I will generally use a 1-minute time frame, and then I will also be aware of, let's say, the last 10 days, and last was 3 weeks ago we had the VWAP from the Fed that I've been referencing a lot, and from a significant low or significant high for swing trades, which is really my preferred time frame if we're in that environment, then the swing highs and swing lows, you'll see that where the volume weighted average price from the beginning of the move, let's say a stock goes from 26 to 33, it pulls back to the volume weighted average price from that 26 low almost perfectly sometimes. Then the stock begins to flatten out. Then you anchor a VWAP off the top at 33, and I'll send you an example of this, Anthony, so your listeners can see it, and you'll start to see that shift between the buyers and sellers and where they actually gain control. That the VWAP from the low will act as support slowly. The VWAP from the peak will act as resistance. It'll bounce between them, and then as the buyers regain control, as it gets above the VWAP from the peak, that's when I like to get involved, because it shows the supply has been absorbed, and the buyers are regaining control based on the bigger picture time frame.
Do you have any favorite indicators that you use to help you confirm as a confirmation when you're using the VWAP?
I do, and it's called price.
Okay, so explain to everybody how that works.
Okay, so again, it's the definition of trend. So I was being cute there. I know what your question was. I use a MACD, an RSI, or anything like that. I use moving average, simple moving averages as reference points because they still have a lot of value. People look at them. But basically, I like to say only price pays, and I like to keep my analysis as simple as possible. I'll look for expanding volume in the direction of the trend and diminished volume on the retracements. But the VWAP blends that together for me. So when I really look at it, as I always say, only price pays, we can keep our analysis pretty simple and just, again, use the definition of trend for the time frame that you're involved in. So if I'm, swing trading, I'll look at it and say, as long as it's making higher low highs and higher lows on this swing trade, then I want to be involved. And what that time frame might be is I'll be looking at 10-minute charts that go back, for 10 days. And as long as it's above as long as it's above a rising 5-day moving average. So for a swing trade, a 5-day moving average kind of helps me confirm I'm in the right direction. If it's making higher highs and higher lows above a rising 5-day moving average, I want to stick with that swing trade on the long side. And if it's below the declining 5-day moving average, making lower highs and lower lows, then I'll use those lower highs as a place to set my stop above.
Brian, this was great. Thank you so much for sharing this information with us. Where can people find you on Twitter? Give us a website to check out, and also talk to everybody about what you have going on in February, an event that you're hosting.
Yeah, we've Alphatrends is ALPHATRENDS is my Twitter handle. I'm at alphatrends.net, and myself and JC Peretz, All-Star Charts, of course, are hosting an event called Chart Summit in Breckenridge, the February 21st and 22nd. We've got some great speakers, including John Nigerian, Todd Gordon, Howard Lindzen. It's going to be a unique type of technical analysis conference. It's not just sitting in a conference room all day and choosing which speakers to go to. Of course, you can do that, but we're going to be skiing and hanging out with everyone who attends. And in the mornings, and from 3 to 7 p.m., we're going to talk about technical analysis and some tools, how to use them, and make more money. So it's going to be a unique opportunity to get a lot of one-on-one time with some of the people that people see out there on Twitter and online and on television. So we're really looking forward to this. It's going to be a fun event.
Yeah, it sounds like it's going to be a blast. Brian, thank you again so much for joining me on Technical Tuesdays.
Thank you, Tony.
Thanks for tuning in for Technical Tuesdays. Remember, if you're interested in learning more about the basics of technical analysis, or a veteran like myself who likes to have a basic technical analysis guide for referencing, please download the free technical analysis guide on our website under this Technical Tuesday post. Cheers, everybody.